Hello traders, I love it when a plan comes together. Since December, I've been mentioning to you that I'm seeing warning signs that the market is going to roll over. It was simply going to take time for those economic data points to bear out. And you can see over the course of the last 3 weeks that the market's down about 7%. Today's theme is next drop. Before we get to that, if you've made money on my picks, we've been short for about the last 2.5 months. We've had incredible picks. Please give this video a thumbs up. It's going to help me reach more traders. I like to review our previous pick in each video, and I like to start off with that. That's how you can get a sense for how well this trading system works. CRWD. That was the short that I showed you. I mentioned to you that the stock came out with weak earnings. It sold off after the number, and if we go back into the chart, you can see there's your drop, and I recorded that video before the open, and then the stock bounced through the course of the day Wednesday, so it got a little bit oversold, but that was okay, because in that video I mentioned what we want to do is we want to preserve the 100-day moving average on CRWD, and when the market rallies, we want to bump up against it, but stay very tight to it. And so you can see that's the price action on Thursday, and the stock was able to just get above that 100-day moving average. So that would have been our first entry point, is when the stock fell back below the 100-day moving average. Relative weakness here, weak earnings reaction. The table is set for the stock to sell off. So on Thursday, we'll go into the 5-minute chart and we'll zoom out and we'll take a look at what happened. Well, on Thursday, we had this nice little rally right out of the gate. Well, what was the market doing at the time? Let's go into our S&P chart, and you can see Thursday we had a nice big market gap down, and then off of that low, the market was rallying, and it rallied, it hit its high, let's say around 11:10. So let's go and take a look at when the high was for CRWD. Oh, much earlier than 11:10, and the stock was already starting to roll over. So by the time the market makes a high, we can already see some steady selling pressure. And lo and behold, once we're through VWAP, we're also below the 100-day moving average. So you didn't have to take a short up in here or in here, but most definitely you've got multiple price confirmation once you make a new low of the day, because you're below the 100-day moving average, you're below the low of the day, and you've got confirmation that the market is also starting to sell off. When it breaks below VWAP, you've got a double top formation, was not able to fill the gap. You've got resistance here. You've had heavy selling pressure in the market over the course of the last few weeks. The downside is going to be tested. And so with all of this multiple confirmation, market long-term, market short-term, stock long-term, stock short-term, all the check boxes are marked. You're ready to take a short position. You crack down below this low of the day. That's somewhere around the 358 level. Look at how far the stock fell. Let's say that it went down to 318. Folks, that's a $40 drop in less than 24 hours. That's a really nice short. We're going to focus on the short side again today, but let's get our market bearings. So we know that bull markets die hard. We're in a 100-year bull market. So if you look at a longer term chart, it's like drawing a 45-degree angle straight up. Bear markets are very difficult to trade, especially when the trend has been higher after 2 years. That initial crackdown is still going to prompt dip buyers to come in and support the market. And so you see this mixed overlapping type of candle here and this herky-jerky type of price action on the way down. And you know that at some point, especially around these major moving averages, you're going to get some buying. And that's what we saw on Friday. So is this going to be that deep capitulation low that really entices buyers to come in and wham, fuel the market higher, bounce off that 200-day moving average and go? Well, if that's in the cards, buyers sure didn't show much interest. Yes, we bounced off the low. We get a couple of long candles in here. The volume's pretty decent off of this low. Okay, well now you would like to see some decent continuation, but right out of the gate here, as we start to get some follow through, look at the size of that long red candle. They just smashed the market right back down. So we get another long green bullish engulfing candle, but we have mixed overlapping candles in here, and look at the volume drop off. That tells us that buyers are not that excited. This is an oversold bounce and nothing more. Well, some of these oversold bounces can be very violent, and you start stacking candles and they start building momentum, and then the programs kick in and they can actually go very, very high. Not this bounce. And you can see how it really stalled out towards the end of the day. Very lackluster. Couldn't even challenge the prior day's high. And the prior day's high still left this gap unfilled. So my feeling after Friday's bounce was nothing special here. Maybe we get some follow through buying on Monday, which by the way, futures aren't going to open for 2 or 3 hours. So I don't know what the overseas markets are going to do. I know that this type of bounce and a rally back above the 200-day moving average, it'll attract some buyers. And you can see that on any of these market pullbacks, once you have support, you get these nice snapback rallies. But I think what's more relevant is to go into 2022 and take a look at what happened once we started rolling over. This is when the Fed was starting to raise interest rates. Even then, this is after a big market melt up. And you can see lots of overlap in these candles. Struggle to get through these major moving averages. Break below the 200-day moving average. Spend a little time below it. And then boom, you get these nasty rallies here. So what I'd like to see out of the current rally, and then you can see on the backside here, now you've got some follow through selling. I'm expecting that same thing to happen, so I'd like to see a wimpy bounce that lasts a day or 2, maybe 3 at the most, and that struggles to get back to the 100-day moving average. That is where we're looking to reload. I hope we get it, and I'll talk about what happened this week, because a week ago, that was a great pick too, FSLR. Man, I hope some of you caught that. That was a beauty. But in any event, a week ago, we had the same kind of deal where this was a nice big rally on Friday. When I did the video right here, I said, here's what I believe is going to happen. We are going to see the market rally up through the 100-day moving average and test the 50-day moving average. Please go back and watch that video. At the 50-day moving average, that is where I want to see resistance. Now, I was hoping that we would have at least a day that we would spend there, maybe 2 days, because we had some economic news coming out, ISM services on Wednesday, ADP, and then we had the jobs report. I didn't expect to spend a lot of time at that 50-day moving average. I wanted to see that 50-day moving average hold, but I expected to be there more than 5 minutes, maybe a half an hour. We were there early Monday morning, and then the market backed right off, and it plunged right through the 100-day moving average. Man, that was a great opportunity to short, and we did short, but that was all day trading shorts because we needed a little bit more time to get our longer term swing shorts off. More than 20 minutes for sure. So now we're day trading on the way down, which we did well day trading on the way down. Now we're kind of in this mode where we've got to wait and see what type of bounce we get off of this 200-day moving average. The 100-day moving average is quite a distance away, and I don't believe the market's going to have enough strength to get back there. I'm looking for mixed overlapping candles and very light follow through. I don't think we're going to be able to get through these highs right here, which are about, let's call them 585. And I will drop a line right there just for our reference. This is about where I think we're going to get to as far as a bounce. If we come in and the market is gangbuster, go, big day on Monday, big day on Tuesday and Wednesday, nice big rally, we get through this level, great, don't take your short positions, okay? We're evaluating right now, we're waiting, we're watching. We've got the FOMC statement coming a week from Wednesday, so about 10 trading days. The market is going to want to hear some dovish news from the Fed. We're starting to see economic data points continue to soften. The 151,000 jobs on Friday was better than feared. Hourly wages, 0.3%. That's good. So on the surface, it looks good. The problem is the continuing claims, and the problem is the household survey. We're seeing that the government's number isn't really matching what we're seeing from the household survey. So consumers are starting to pull back. We've seen the Atlanta Fed lower their Q1 GDP growth forecast to minus 2.8%. Whoa. I don't like the backdrop here, and I don't like it for Europe. I don't like it for China. I see global softness right here. And so this little bounce that we get, if it's wimpy, and the market's really struggling to get up to that 585 level, we may not go much higher. CPI is coming out this week. PPI is coming out this week. When I take a look at some of the other numbers that have been released, inflation seems to be moving higher. So I see that in ISM manufacturing. The survey revealed that manufacturing prices had actually gone up quite a bit. If we start seeing some hotter inflation in those numbers this week, it is going to cast a dark cloud over the market, because that is going to keep the Fed from cutting interest rates as soon as the market would like it to. And central banks around the world have been easing, even though they're still seeing signs of inflation, because they are worried about economic growth, and they see that deterioration as a much bigger threat than inflation. Our Fed has been one of the few that's been steadfast in their policy. We do have tariffs coming up. We've got the budget coming up, continuing resolution. So I don't see too much of a problem there. Republicans seem to be unified. The tariffs, who knows? They're on 1 minute, they're off the next. Even without the tariffs, if we didn't have any tariff talk right now, I'm telling you that based on what I've seen in December and January, the macroeconomic backdrop has been softening. So I feel that regardless of the tariffs, the market was going to do this anyway. So we want to watch and we want to evaluate this bounce. So if we get to that 585 level and then we back right off, that's when you're going to start initiating some bearish swing positions on the notion that the 200-day moving average is going to be challenged very quickly, perhaps this week again, and perhaps we close below it, especially if CPI and PPI come out hot. Let's say that they come out and they're fairly benign, and the market's like, oh, well, that wasn't too bad, and we just start creeping higher, and we get up to the 100-day moving average. That scenario is fine with me. I'm going to wait, and I'm going to be patient. I want to see this bounce, how high it goes. The higher it goes, the more time I have to evaluate the price action and the volume, and the more time I have to plan my trades. That would be the ideal situation for me, because as I have that time, I'm also able to evaluate what stocks are doing, and I'm able to find the best shorts. And so what I'd like to see is stocks that have broken major support levels, and that are struggling to rally when the market rallies. And they cannot get above that previous support, which is now resistance. And if I see that the market has a decent bounce to it, but the stocks can barely get off the deck, I know those are going to be my shorts. And the more time that I have to evaluate this, the better, and the better my entry point. So if you ask me what I would prefer to see, I would prefer that, hey, I'm not initiating any swing shorts this week because the market's giving us a nice little bounce here, and I'm able to sit back and evaluate that bounce. Don't make this mistake. Oh, so many people make this mistake. They come in and they get cute, and they start buying like this is going to be a dip that makes a new all-time high. I'm telling you, folks, it's not going to happen. The news is very heavy, and any bounce that we get is going to be relatively short-lived, just like I showed you on Friday. That was a crappy little bounce. We should have seen much better. If buyers were excited, we would have closed probably close to this 580 level, maybe even above it. We didn't see anything close to that. So, favor the short side. If you're a professional trader and you've got some bullish stocks that you have lined up and you want to trade a little bit of this bounce, great. Trade smaller size. You're a pro. You're going to know when to pull the plug on those trades. But for novice traders or swing traders, don't get cute with it. Just keep your focus and evaluate this bounce and wait for those signs of resistance, because you're going to have a chance to load up on some nice swing shorts. We do have the FOMC statement coming a week from Wednesday, so I would not be going gonzo on your short positions, but any bounce is going to tell you, hey, this stock is weak. And yes, you can put a position on and perhaps even weather that FOMC statement. That's how I'm going to be trading it. And so I've taken a look at a number of different stocks, and I went into my Red Royal Flush search, and I wanted to see stocks that had pulled back and that really didn't do much of anything during that bounce on Friday. So you've got the market off of the lows of the day, and this is, I mean, it's nice from 365 to 575. Hey, that's a 100-point S&P move. That is not a horrible bounce, okay? That's a pretty sizable move. What did JPM do? Couldn't even get back to its high of the day. And here you can see the market closed well into positive territory and well above the high from the day earlier. Didn't get that out of JPM. Relative weakness almost the entire day. Heavy volume. All right. I feel pretty confident that this stock and other financials are pretty dang weak. And you can see we had this horizontal resistance level right here. Now this is a failed breakout. Anybody that bought here is now losing money, and you're going to see continued selling pressure. You get a bounce on Friday. What did the stock do? It didn't even get close to getting back above that 100-day moving average. Not even close. So that's resistance now. So if we get the market rally that I'm looking for, what would I ideally like to see out of JPM? I'd like to see it struggle and struggle and struggle to recapture that 100-day moving average. And if that's what plays out, it's going to be a sign that sellers are keeping a lid on that stock, and they want to sell as much as they can while the going is good. Now, there isn't anything dire for banks right now. Obviously, it's not good when the jobs conditions are slowing down and people are losing jobs. It wasn't a horrible number, but we're starting to see credit card delinquencies rise, and banks are going to start tightening up because they are not going to want to lend as much money right now, so that'll be tough on profits. So this 50-day moving average absolutely has to stay intact. If we get just above the 100-day moving average and we get a nice decent rally out of the market over the course of the next few days, let's say we get up to that 585 level and perhaps even a little bit higher, well, then I want to see JPM just barely poke above that 100-day moving average. Maybe it can get somewhere into the, let's see, maybe the $250 range right in here. And then when the market starts to soften and we start to see the market roll over a little bit, blam! I want to see JPM just fall apart. Takes out that 100-day moving average like that. That's a sign that sellers are aggressive. When I see that type of price action and it syncs up with what the market's doing, I'm going to get short. I'm going to probably buy some puts. And I'm not going to buy weekly puts. I'm going to buy some puts that has some time to it because I feel that that type of price action, I should be able to get some follow-through selling 4, 5, 6, 8 days into that FOMC statement. And I'll be perfectly fine with the stock rolling over, hanging onto that position, and then perhaps lightening the load up just before the FOMC statement and taking some gains on it. Maybe I take all the gains, maybe I take partial gains, but I would expect on that type of formation and that type of pattern and the market rolling back over and taking out that 200-day moving average, what might I possibly see in the underlying stock? Well, the low was 239, so I would at least expect JPM to get back to 239 and probably even lower. Maybe it gets down to the 235, 237 area. Beautiful. If I'm getting short up in here, that's going to leave me with really nice profitability in it. And you can see that bank stocks at a 36 IV are relatively cheap option implied volatilities. So you would go in the money and you would buy options that have a couple of months worth of life, go deep in the money, and buy options that have a 0.7 delta or higher. We're just looking to take a surrogate stock position. That's how I would play it. The market is herky-jerky. If you go in and you buy weekly options, mistake. Big mistake. Yeah, but I don't plan on hanging on to the position for more than a few days. Why do I have to go out 2 or 3 months? The market's so damn herky-jerky. 15-minute chart. Look at this chop. It's all over the damn place, okay? All over the damn place. There's a general trend lower. All you need to do, if you buy some weekly put options on this nice drop right here, I got a bounce here, I got a bounce here, and now it takes all this time for the stock to get back down to my entry point. Tick, 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 tick. Every little one of these contra moves is going to take time off the clock, and you're going to lose your money in time premium decay, and you're going to watch those options move like the wind because they expire in a few days, and they could easily expire worthless. You're going to be freaked out, you're going to puke out of the position, and then you're going to watch the stock do what you thought it was going to do in the first place. But you didn't give the trade enough freaking time. Buy the longer dated options, go in the money, 0.7 delta or higher, and take a deep breath and sit back and watch them. Stop trading weekly options. That is a losing proposition when the market is this freaking choppy. You don't have any staying power in the position. So please do yourself a favor and forget about trading weekly options. You can tell I'm a little bit passionate about this because I see that as a major pitfall when I talk to lots of traders. So I like JPM. I think that's going to be a really nice short. So yes, if it gets above the 100-day moving average, that's cool. I almost prefer that because when it cracks back below that 100-day moving average, that gives me a natural entry point and a natural stop out point when it goes back below it. And then from that point on, I'm looking for confirmation. Market down, stock down. Market flat, stock down. Market up, stock down. That tells me that sellers are whacking away at it. And then all I need is a little bit of help from the market and a test of that 200-day moving average, and these options will be money. That's how I'm playing it. I'm going to try and do a video. This is going to be a tough week for me to get one out, but I'm thinking, let's see, maybe Thursday morning, maybe Wednesday afternoon. So watch for that video. Please give this one a thumbs up. Subscribe to my YouTube channel, and you won't miss those shorter videos. Trade well. We will see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.